Business acquisition. A business acquisition is when one company purchases a portion or all shares of another company. This allows the purchasing company to gain more or all of control of the acquired company. There are many reasons why companies acquire another company. They might seek economies of scale, diversification, greater market share, increased synergy, cost reductions, or new niche offerings. When a company purchases a company for more than 50% of the target firm's stock, the acquirer is then allowed to make any decisions regarding the company without the approval of other shareholders. News outlets like to cover the larger acquisitions of companies, but companies are bought and sold on a regular basis. Another way to describe a business acquisition is called mergers and acquisitions. If a company were to look to expand to different territories or locations, they could look to acquire companies from various markets. The company that's being purchased might already have an established brand name with other intangible assets that can help start the acquisition off with a more solid base. In addition, acquiring a company could mean less competition, which could help companies focus on more productive tasks. Acquiring a company could also be for the gaining of newer technologies. If the company that is being bought has better tech, it could mean less time and money spent on new developments. Companies may also look for younger companies to acquire to incorporate into their revenue stream as a new way to profit. For example, James owns a software company that has a large customer base made up of local businesses. Last year, another software company opened in James's area. At first, James was not worried, as many of his customers had been working with him for years. But after about 6 months, he noticed that many of his regular clients were ending their contracts with him. James decided to call one of his dedicated clients and ask them why they ended their contract with him. They mentioned the new software company offered all new customers a 20% discount on their first year, and that the deal was too good to pass up. James knew that something would have to be done about this if he wanted to stay in business. After meeting with his CPA, they wrote up an informed plan and called the owner of the other software company to make an offer to acquire them for $500,000. The owner accepted the offer, and a month later, the company had been completely handed over to James. With this new expansion on board and his previous clients secured, James was able to not only save his business, but see it flourish even further.